Uber continues to be one of the worst capital allocators in corporate history, and yet, doesn't matter their stock price. Coming up here in the Jog. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It's 8:44 here in the middle part of the country on August 2nd, 2022. Here's your morning jog around the economic headlines of the world. We're doing all earnings this morning as we are in earnings season. Let's start off with Uber, and shocking again, they've burned a bunch of money into thin air. Net loss of $2.6 billion, more than half of which is investments in companies that will likely never make a dime. But there is some good news. They continue to be a victim of their own success. They can't fail in their core business. Ridership up significantly, revenue up to $8 billion versus about $7.3 billion estimated. Drivers continue to sign up at a record clip post-pandemic. Listen, folks, Uber provides a very valuable service to their economy. They spit off some $300 million in free cash flow. They're just terrible with that cash when they get it. Caveat emptor, not the greatest capital allocators, but they are here to stay because their service is just so darn valuable. BP, dividend boost, profit 14-year high, $8.5 billion in Q2. That's pretty good. They say they're going to dump about $500 million of that back into hydrocarbons as a token salute to the global energy supply crisis that's going on and going to continue. By the way, the only way you could quickly deploy $500 million in something that was reasonably likely to help short-term energy supply, it's actually in the U.S., right? You got to frack somewhere. You got to use 4D. You got to make sure you're bringing on some oil that can actually be recovered soon and address supply crises. See, the super majors are good at one thing, and that's these long cycle projects that require millions and sometimes billions of dollars worth of investment that take 3 to 8 years to come online. That's just not fast enough for the current global supply crisis. If they are additionally adding $500 million in CapEx, basically has to flow back to fracking. And if you're anti-fracking, that's bad news for you, but good news for those of us that do believe in energy independence for the United States. Last but not least, before we get you off to a nice Tuesday, Ferrari, racing. Orders up 30% year on year. How about them apples? Of course, you see their cars nearly every weekend now that Formula One has blown the roof off. Sometimes they're not so good, but orders continue to be strong. The global elite continue to have more dollars than they can possibly spend, and some of that falls back into Ferrari's coffers, which, from a shareholder point of view, is an awful good thing. If you want some additional info throughout the rest of the week, feel free to find me on the internet. I am out there. Till then, hope you, your family, have a really good rest of your Tuesday. I am